Hello, and welcome to Zacks Shopping for Stocks. I'm your host, Maddy Johnson, an editor here at Zacks. I know it's been a little while for our Zacks Shopping for Stocks podcast, but I'm back, and today is June 13th. And like my most recent episode, I'm going to do a rundown of what's been happening recently in the retail industry, as there have been big news stories affecting the sector left and right. So we're going to start with Macy's. And it seems like whenever anything bad happens to the retail industry, we can likely point our fingers back to the struggling department store. So last week, the company's chief financial officer voiced her concern that Macy's full-year gross margin could be 60 to 80 points lower year over year. And it might also be down 100 basis points for the current quarter. Yikes. So on top of that, Macy's continues to cut its prices as it fights to reach its earnings forecast, which the company recently reaffirmed. Macy's shares have lost 35% of their value in the past year alone and is currently in the midst of closing about 100 stores. And Macy's is not alone when it comes to closing stores, especially with department stores. Sears, for example, is closing stores left and right as well. So this gross margin announcement brought down fellow department stores Kohl's and Nordstrom as well. So speaking of Nordstrom, the Seattle-based retailer announced last week that it is exploring going private. Shares of Nordstrom, which trade under the ticker JWN, were up over 11% in morning trading. So investors clearly excited about this potential move and had climbed as much as 20% at one point. In a release put out last Thursday morning, Nordstrom explained that its co-presidents Blake Nordstrom, Peter Nordstrom, and Eric Nordstrom, in addition to president of stores James Nordstrom, chairman emeritus Bruce Nordstrom, and Ann Gittinger, have recently formed a group along with a number of independent directors to quote, explore the possibility of pursuing a going private transaction, end quote. The release went on to say that the private transaction being considered would see the group formed by the Nordstrom family acquiring 100% of Nordstrom's outstanding shares of common stock. The group has not yet made any formal proposal regarding a potential private transaction, so this is important to note. They're still kind of feeling things out, exploring, any possible move. But despite being leagues ahead of its competition in terms of customer service and online and digital appeal, in my not-so-humble opinion, Nordstrom is my favorite department store. I am a dedicated customer. I have the Nordstrom credit card. I shop there way too much. I have spent so much money over the years. They just keep doing it right. So for them to be considering going private, I think, again, in my opinion, is a really smart move. And like I said before, investors have really warmed up to the deal. But despite all of this, Nordstrom still has not been able to escape the woes affecting the entire retail industry, i.e. Macy's. Its most recent quarterly earnings were weaker than expected, especially its comparable store sales, though it did report a 37% jump in net income. So moving on, I want to talk about J.Crew. They're a privately held company and a strong competitor to other apparel retailers like Banana Republic and Gap, think Club Monaco, which is owned by Ralph Lauren. And one of the biggest news stories to rock the retail industry last week, and its CEO, Millard Mickey Drexler, decided to step down after 14 years in the role. So he will be succeeded in July by James Brett, who is currently the president of Williams-Sonoma's more modern furniture retailer, West Elm. Drexler will stay on as chairman, and he still owns 10% of the company after he steps down. Drexler first joined J.Crew in 2003 after he was abruptly fired from Gap and helped make the brand into the classic household American brand name it is today. So under his leadership, sales absolutely soared, and he went on to create Madewell, J.Crew's tomboy sister brand. Recently, however, the brand, J.Crew, has started to take a downturn. Last year, sales fell 6% to $2.02 billion. It announced 250 corporate job cuts in April, which the brand announced a risky debt restructuring in May, and the departure of figurehead and creative director Jenna Lyons just a few months ago. J.Crew also has struggled to win back customers in the age of fast fashion. So fast fashion think brands like Zara and H&M, and this is when These companies are able to churn out styles at a much quicker pace than traditional apparel companies like J.Crew and Banana and Gap. And under Drexler, the company has struggled to find its digital footing. So in a recent interview with the Wall Street Journal, he conceded that he didn't catch on fast enough with just how much social media affects fashion and how much impact fashion bloggers have on apparel companies and the retail industry. Drexler also said J.Crew has become too, quote, elitist and would need to transition to both lower prices and have a more accessible image. So Mickey Drexler is a giant in the retail industry, and he transformed Gap in the 90s, and he transformed J.Crew in the 2000s and the 2010s. Him leaving J.Crew was huge news last week. He made me fall in love with the brand. He made most of my friends fall in love with the brand. But he also, under his leadership, he made me turn away from the brand over the past few years, just because looking at the brand today, there's not a whole lot there that I like about it. J.Crew is one of my favorite stores, so I hope now that it gets its footing back. Looking at the brand today online, you see a lot of promotions, but again, with James Brett coming in from West Elm, they run a lot of promotions as well. But I mean, that's what customers look for now, especially online. So I think there's hope for J.Crew, and I can't wait to see what the future holds for them. So I think that does it for today's episode of Shopping for Stocks. Thank you so much for listening. And remember, if you think I missed anything or you have a topic in mind that you think should be covered, please shoot me an email at podcast@zacks.com. You can also check out all of our other exclusive audio content at zacks.com/podcast. And remember, please subscribe and leave a rating on iTunes. Thanks for joining, and I'll see you next time on Zacks Shopping for Stocks.